I spoke with CEO and co-founder Alex Karp. He says the results show that the value in AI is in the management of large language models as opposed to the creation of them. The winners in AI will be powered by Palantir and the losers will read analyst notes. What I want you to tell people is we need to invest even more in the government space and in industry and implementing AI that is actually changing our enterprise, because this is how we make America even stronger, and there is no real alternative to us. The stock's up over 140% this year. It's up more than 580% from late 2022 lows of $6 a share. And Adam, I'm going to go back to you on this one because this has been a retail darling.
Nvidia, like you said, is honestly cheaper now than it was 3 years ago on a forward multiple basis, which is incredible. That's just how quickly that company is growing.
Alex has said this for years, that they have no sales and marketing, and everyone scratches their head.
Palantir just dropped bombshell earnings, and CNBC are lapping it up. But a Wall Street analyst has a few concerns you need to be thinking about. Let's get cracking.
Well, we've got more earnings out. Palantir results have crossed the tape. It's a beat and a big raise for the AI software company. Earnings of 10 cents adjusted per share. That was a penny better than expectations. Revenue, $726 million. That was also a beat, up 30% year over year. Palantir forecasting Q4 revenue of $767 to $771 million. That's higher than analyst estimates. Adjusted free cash flow in excess of $1 billion for the full year. 2024 U.S. commercial revenue raised to upwards of $687 million. That represents a growth rate of at least 50%. So for the quarter specifically, this is a U.S. story. U.S. government up 40% year over year to $320 million. U.S. commercial revenue up 54% year over year to $179 million. 104 deals over $1 million closed in the quarter. Customer count up 39% year over year. All, I might add, with almost no marketing or sales team. I spoke with CEO and co-founder Alex Karp. He says the results show that the value in AI is in the management of large language models as opposed to the creation of them.
That's impressive growth for a company operating with minimal marketing. It really speaks to the core value Palantir brings: AI solutions that actually drive impact without needing a massive sales push.
That, quote, the winners in AI will be powered by Palantir and the losers will read analyst notes. In his shareholder letter, Karp saying, quote, this is the software century and we intend to take the entire market. So I asked how Palantir plans to do that. Karp pointing to the defense side, a shift to software driven with hardware dominated military environment. The case in point, Maven, which is deployed in the Middle East. On the commercial side, saying any vertical with complex operations is where they're seeing adoption. Hospitals, manufacturing, logistics, to name a few. Karp saying, quote, what I want you to tell people is we need to invest even more in the government space and in industry and implementing AI that is actually changing our enterprise, because this is how we make America even stronger, and there is no real alternative to us. He says it could be called almost U.S. AI. That, quote, our bias on this is so differentiated from the market, although apparently people in Silicon Valley are starting to understand this, but it's just giving a structural advantage to America first and our allies second. You can see this on the battlefield. You see it in U.S. industry. The inverse of this, you see it in the sluggishness, lack of perception, and general malaise in continental Europe.
Karp's vision for U.S. AI underscores Palantir's unique approach, rooted in national strength and strategic advantage. By prioritizing real-world, high-stakes applications, Palantir isn't just scaling AI, it's defining what AI leadership means for America and its allies. Could this America-first stance give them a permanent edge over more cautious competitors?
But it's a tale of two worlds, the AI-driven world and the AI-rejecting world. So if you take a look at shares of Palantir, they're popping right now. They're up 11%. The bar was high here. The stock's up over 140% this year. It's up more than 580% from late 2022 lows of $6 a share. And Adam, I'm going to go back to you on this one because this has been a retail darling, but I know everybody talks about it as, software company, software, enterprise, but in some ways it almost reminds me of Nvidia, because Nvidia has been growing into its valuation, and in some ways, analysts are having a hard time wrapping their arms around how quickly it's growing into its valuation. At least that's been the case over the last 2 years. Palantir seems to be a very similar dynamic, at least right now.
I mean, look, you're back to 30% year-over-year revenue growth. You just said I think that was a golden number for the market. And I think Nvidia, like you said, is actually getting cheaper on a forward multiple basis as it goes up. It's honestly cheaper now than it was 3 years ago on a forward multiple basis, which is incredible. That's just how quickly that company is growing. Now you have Palantir, which is kind of taking the AI trend, but not looking at it from the hardware perspective and the chip perspective, but how can you implement that into companies and governments and everything from that we're used day to day.
Palantir's growth trajectory echoes Nvidia's rise, but with a unique twist, focusing on AI's real-world applications instead of hardware. As it scales rapidly, it's redefining AI's role across industries, positioning itself as indispensable. Could Palantir be the next Nvidia, not in chips, but in strategic influence?
I think this is the first company that's really able to do that successfully and command the premium that we're seeing in that stock. And based on the market's reaction, I think it can keep going higher.
Here's a Palantir popping right now after the software company reported earnings moments ago. U.S. commercial revenue up 54% versus last year. And you see a U.S. government revenue also jumping 40%. Stock's up about 14% right now. Joining us now is Jefferies analyst Brent Thill. Brent, it's good to have you on. Want to get your initial reaction to these results, which really do show strong growth across the different businesses, particularly where U.S. business is concerned.
Yeah, they had a great quarter, 30% top line growth, 38% margin. So it's not just a top line fueled story. It's also balanced by bottom line. And the rule of 68 is pretty rare in software. So the results are fantastic. I think the biggest concern on everyone's mind is still valuation. It's the single most expensive name in software. It's twice the multiple of CrowdStrike, which is a very well-run company. So when you have a company this multiple to 2x that of one of the best-run stories, that is something that I think investors are still somewhat concerned about. But the print itself was fantastic and shows again the position that they're leading in AI, and it's good to see the government business also show an acceleration as well.
I'm glad you brought up the rule of 68. We always talk about the rule of 40. The fact that they're at 68%, I think that makes them the highest of the tech companies, maybe slightly higher even than Microsoft. I mean, it's something that CEO Alex Karp spoke to me about, and he basically said the reason they have such a strong rule of 68 is because they don't have any marketing.
Palantir's ability to achieve a rule of 68 is remarkable, especially without a significant marketing push. This illustrates how effectively they're leveraging their unique value proposition in the AI landscape. But does this premium valuation indicate that investors recognize a transformative potential in Palantir that rivals simply can't match?
They barely have sales. That's where people tend to spend. So the fact that they are very focused on their engineers and they're very focused on customer support to their customers, both on the government and commercial side, how many levers then does that give this company to pull as it pushes further into this AI application layer?
Yeah, I mean, Alex has said this for years, that they have no sales and marketing, and then everyone scratches their head like, if this is this big opportunity, why aren't you applying more sales resources to this problem? And again, every time he says that, I literally scratch my head. I don't understand it. So to your point, if they could actually add an enterprise team, if they could market more proactively to the Wall Street community versus just the retail community, and I think there's so many steps they could take to unlock more value from this. And I think the analogy I had was at the beginning when Musk had the Tesla, it was a car that very few could afford, right? And now with the Y, everyone can afford it. Not everyone, but a lot of people can afford it as a car, right? Versus the higher end Tesla. And so I think their move is the same move, which is how do you go from very high end, only a few people can adopt you, to now mass market? And I think it may not be the perfect playbook, but I think they're following that playbook.
Palantir's focus on engineering over sales is unconventional, but it reflects a deep confidence in their product. This raises a crucial question. Could a more robust marketing strategy unlock even greater value, similar to how Tesla expanded its reach? If Palantir successfully navigates this shift from niche to mass market, we could see them become a household name in AI, revolutionizing not just tech, but how governments and industries operate.
I think everyone can come to Palantir. They're trying to get you to start small, get big with them over time. Before it was just, hey, you got to write a big check. So I think there's a lot of levers Again, approach to Wall Street, approach to deal sizes, building that sales team. There's a lot of levers that they can still pull that they haven't. Remember,
well, Brent,
this is an easy comp too. This is an easy comp. Comps get harder now.
Product-led growth makes sense to me. I mean, Atlassian and others have done it, only spending as much in sales and marketing as you have to. They seem to still be selling. I don't personally know Alex Karp, but it sure seems to me like he's taking a shot at Analyst every chance he gets. You've got a hold on Palantir. It's up more than 12% after hours. Maybe he's talking about you. What does it take to get you off of a hold here with as high as this stock has gone?
Yeah, he likes to attack us and say that we still stay in Motel 6s, which is fine. I'm okay with that. Yeah, I mean, look, I think the challenge we have as analysts is we're here to protect investors. And the companies, in terms of the financial momentum, is an A. But when you have a multiple at 30 times, and we've seen this movie before, John, I mean, you've had Snowflake trade at 50 times revenue.
Palantir's strategy to encourage companies to start small and scale with them is a smart approach, allowing them to build trust and demonstrate value over time. But as they seek to broaden their market reach, it's crucial to maintain that balance between product-led growth and the need for a more structured sales effort. The skepticism from analysts might stem from past valuation spikes in the tech sector, but could Palantir's unique position in AI really defy those historical trends?
You had Datadog at 30 times. How did those multiples end? They're all materially lower. And so we think, again, the challenge right now is you're in a level where you have no one in their remote atmosphere in terms of the multiple. So you're going to have to go back to a TAM analysis and believe, almost like when ServiceNow was 30 billion TAM, did you think it was going to get to 175 or $200 billion TAM? And that's the only way you can make it work right now. For long-term investors, you have to look at it that way. There's no other way to value it. I mean, there's just nothing remotely close. I mean, CrowdStrike's a company that serves way more people than Palantir and has half the multiple and is the next most expensive name.
Yeah.
So, I mean, it's just, that's the hard part. Momentum's there. Valuation is the concern.
Valuation concerns are valid, especially in a landscape where many high-flying tech stocks have faced significant corrections. But what if Palantir's unique position in AI and its expanding total addressable market could fundamentally shift this narrative? With their software increasingly vital across various sectors, they might not just capture a larger market share, but redefine the scope of what's possible with AI.